Hello everyone and welcome to my YouTube channel. As you can see, our topic for discussion today is accounting standards. Now, before we understand accounting standards, in my previous video I had spoken about generally accepted accounting principles or GAAP. Now they both may sound similar, but there is a difference. In case of generally accepted accounting principles, those are certain conventions or certain practices which are very common in the accounting field, and therefore it is common for all of us to follow them. Accounting standards, on the other hand, are mandatorily and they have to be followed for a better preparation of the financial accounting. Therefore, accounting standards are the policy documents guiding the measurement. But of course, when we say guiding, we are not trying to say that it is optional, but it is mandatory. The treatment and disclosure of financial or accounting transactions. Therefore, in order to make it simpler and in order to bring uniformity, the accounting standards are issued, and of course they are to be followed mandatorily. Moving on to the definition by Cora, it makes the whole concept of accounting standards pretty simple. It is a code of conduct imposed on an accountant by custom. Now when we say custom, we are referring to the generally accepted accounting principles because those were customary policies that were being followed. When we say law, we are referring to the accounting standards which have to be followed mandatorily. And which is the professional body doing this? It is the ICAI, Institute of Chartered Accountants of India. Moving on, what is the purpose of the accounting standards? For that, I have made a code word for us to understand easily. The code word is RCQ. R stands for reliability. Now, if accounting standards are there comes in uniformity, and also there is a regulatory body, which is the ICAI, which is making sure that everyone follows the same procedure while preparing the financial accounting. That makes the information very much reliable for everyone, for general users like you and me. Secondly, C stands for consistency. Now, if the accounting standards are being met, that leads to uniformity in the practices that are being done, and therefore every single time when the financial accounts are being prepared, there will be a consistent method that will be followed and there will be no dissimilarity between them. Second C stands for comparability. Now, if there is a consistent practice of following the accounting standards and preparing the financial accounts, that automatically leads to comparison. There can be comparison of the financial accounts of two different companies, maybe of the same field, or maybe of two different fields also. Thirdly, correctness. All of these accounting standards make sure that there is less scope for error and the scope for making mistakes is almost eradicated. Who issues the accounting standards? It is the Accounting Standards Board or the ASB of the Institute of Chartered Accountants of India, which prepares the accounting standards. Moving on to the nature. Now, it is a mandatory thing. Why? Because accounting standards are being imposed and we are being told mandatorily to follow them so that there is uniformity, so that there is reliability, so that there is comparability, and of course, correctness. They are guidelines. Of course, they are mandatory guidelines, not that it is optional for us. We have to follow them. And when it is a matter of law and accounting standards, a certain accounting standard, let's say, is having a conflict with the law, though there is very less scope for that because when we are preparing accounting standards, the law is taken into consideration. But let's say there is a confusion, there is a conflict, then of course the law will prevail and the accounting standards will be altered accordingly. Lastly, flexible. Let's take an example of depreciation, for example. We have a separate accounting standard for that. So, in case of depreciation, we have straight line method and also we have reducing balance method, which gives us options. Therefore, when we are preparing the financial accounts, we have a certain amount of flexibility as per our convenience and requirement. Now, lastly, how many accounting standards are there? In total, we have 32 accounting standards prepared till date, but out of them, 3 are not recognized by the Companies Act 2013, and we have 2 accounting standards which are withdrawn as well. So technically we can say there are 27 accounting standards which are operating till date. I hope I have managed to explain accounting standards in a concise and simple manner for you. If you have found value through this video, you can share it with your friends. We will meet again in the next video. Thank you.